Hello, welcome to this week's episode of Closed by Mo. My name is Mohammed. I'm hopefully your favorite YouTube host on most things real estate. I'm also a real estate broker and an investor in New York City. In this week's episode, we're going to talk to a lot of our first-time buyers, especially one of the scenarios that I've often seen firsthand when it comes to working with first-time buyers earlier on in the process, or even if you've already identified a property and you've started to make offers. This is going to be very important for you because this is one of the biggest misconceptions that I see a lot of first-time buyers have, especially when you've worked really hard to save enough money for a down payment, and that is the difference between a down payment and a closing cost, and what is all encompassing within the closing cost itself, because this is a different amount of money that you'll have to pay when compared to versus a down payment amount. Without further ado, let's jump right into exactly what goes into closing costs and what you can expect as a first time buyer, second time, third time, whatever amount of buyer you are. Let's go. Now, before going into this and sort of giving you an idea of what to expect with your closing costs, or at least a breakdown of the closing costs, you should know that this is a very general list, right? By no means is this exactly what your bank's going to have. Every single bank is different. Every single loan product might even be different within a bank itself. So definitely speak with your lenders or loan officers. And if you have any questions, or if you are in New York City, wherever it is, maybe even in the tri-state area, and you need me to put you in touch with a couple of different lenders I've worked with, just let me know below. All my information and contact information is in the comment section below. Now, to start us off with, a big part of the closing cost is obviously the down payment too. Some people might not consider this as part of the closing cost, but I'm just going to group this in here just because of the fact that technically at the closing you are required to make sure you have that full down payment amount. Now, the big misconception I see happen, especially with a lot of first-time buyers that might be coming in with a low down payment program like an FHA or VA, is you assume that the down payment amount is all the amount of cash that you could possibly need. So let's say a 3.5% down payment on a $100,000 house is $3,500. A lot of first-time buyers will go into it thinking, well, hey, if I'm using an FHA program and I have 3.5% down, that means I only need the 3.5% of the purchase price. That's not the case whatsoever. I would definitely suggest having maybe even double that, especially for an FHA loan program, because you will have additional closing costs, especially when it comes to PMI, which is the mortgage insurance program with a low down payment amount. But just to give you a bit of an idea in terms of what you can expect for closing costs, obviously you have the down payment, but you'll also have loan origination fees. Loan origination fees is basically a fee or a certain amount of points or a percentage that the lender will charge for originating the loan itself, right? Banks are in the business of making money. They make money from lending money. So they will charge an origination fee based on the amount of money that they're lending to you. Origination fees will vary lender from lender, and from what I've seen, they can be negotiable depending on the size of the loan overall that you're getting, as well as how much business you've done with the bank and what kind of a relationship you have with the lenders as well. The second thing that you should also keep in mind when it comes to closing costs is appraisal and inspection fees. Don't assume that just because you're getting the loan from the bank and that the bank is ordering the appraisal means you're not going to be paying for it. You are responsible for paying for the appraisal and the inspection fees, things like that. The bank appraisal is definitely going to be required, especially if you're coming in with like a conventional or a government-backed loan program, because the bank needs to make sure that the appraised value of the property matches, or if not exceeds, the purchase price of the property that you're going to be paying for in terms of the offer that you've made. The next thing that you're going to be definitely paying for when it comes to the closing cost breakdown is title search and possibly title insurance. Now, title insurance may not be required depending on the state or the bank that you're working with, but a title search is definitely something that will and should be required, because this is the search where the title company will go through all the different encumbrances of the title itself, which is a fancy way of saying they'll go through the title history of the property to see who and what has any claims to the title. So for example, if you're buying a house from an owner that has an unpaid bill that was in collections from 30 years ago, and that company has a judgment on the owner, so ergo they have a lien on the property, then you have to make sure that pops up in the title search. That's why we order a title search, and that will be paid off at or before the closing, so you are not responsible for that lien, because remember, it's attached to the property and whoever owns that property itself. The second thing that also is included in the closing cost is the escrow fees, right? Obviously, you're going to have to be able to put a certain amount of money into escrow for any kind of contract signing deposit, maybe even prorated property taxes. For example, the property taxes in most cases aren't usually starting at January to December. That's not the tax year. Usually it's like the middle of the year, whatever it is. Obviously, property taxes, school tax, these can all be different at, due in different times of the year. So if you're buying a property that you're, purchasing in the middle of the year or in the first half of the year or, the first quarter of the year, you want to only be paying the property taxes for the amount that you're responsible for. And it might be required that you prepay a certain amount of it so the bank can hold it in escrow so they can issue the property tax bill or the property tax payment once the property tax bills are due. The next thing that you're definitely going to have to be accounting for when it comes to closing costs is your homeowner's insurance. Now, homeowner insurance costs can vary from state to state, from city to city, obviously. It can also vary from person to person. One thing I would definitely advise you, if you have, multiple cars, or if you already have a, let's say, auto insurance policy with a certain insurance provider, definitely get a home insurance quote from them, because what I've seen personally as well with my clients is most insurance company will give you a pretty sizable discount when it comes to bundling the different products together. So if you bundle your auto and your home together, you should be getting a nice, you should be saving a nice chunk of change. Another thing that you should also definitely be keeping in mind for when it comes to closing costs is your prepaid interest. So there might be a certain portion of the overall interest amount that you'll be having to prepay or keep up front for the bank, especially depending on like when you close or when you might rate lock, because the bank wants to make sure that that interest amount that they've accumulated on the loan from after issuing the commitment but not having closed the on the property of the loan yet is still paid to them on time, because hey, banks are in the business of making money. Other kind of accessory or miscellaneous fees that you might expect to have with closing costs is recording fees. So like in New York City, for example, you have the deed recording fee, which is negligible. It's a couple of $100, but you should still definitely account for that. Obviously, any real estate agent commissions, if you're as a buyer responsible for paying your buyer's broker agreement or the buyer's broker commission because they got you a crazy great deal and they were able to negotiate really well on your side. Anything else as well, like contingency funds, for example, keeping extra money in escrow for certain contingencies to be met. For example, a buyer might put a certain amount in escrow just to confirm with the seller that, hey, I'm going to absolutely make sure that X, Y, and Z happens for me to secure the funding, or vice versa. The seller might hold a certain amount of money in escrow as part of their closing costs because they want to make sure that, one, the buyer is able to close, and if they have any contingencies that they need to meet, for example, delivering the property vacant or fixing the sidewalk or cleaning, whatever it could be in terms of any contingencies, are met. If not, obviously the escrow funds are given to the counterparty minus any fees that the attorneys might charge. With that, guys, I hope you enjoyed this video. I sort of blazed through it. I will link the article on my blog in the description below, along with all my contact information. So if you have any questions in terms of what to expect with overall a breakdown of your closing costs, not the down payment, but anything in terms of closing costs, please give me a shout. I respond to all my calls, texts, and DMs. I look forward to working with you. Bye-bye now.